Hey guys, today we're gonna discuss Dave Ramsey told my best friend to pay off his mortgage as soon as possible, to put every dollar towards paying his mortgage as soon as possible. Is this a good strategy or not? Stay tuned, we're gonna discuss it right now. Guys, after being a financial advisor for many years and then doing real estate for another 20 years and doing 3,000 transactions, this is what I have found so far. Yes, guys, my best friend was told to pay off his mortgage as soon as possible. From a 30-year mortgage he had at 2.5% to try to pay it off in 7 years, to just every penny, every little penny he had in savings to pay it off. And now my question is that the right strategy? Well, it depends on two things: on your risk tolerance and your financial education. In this case, we're talking about your real estate financial education. I say this because if you're very low risk tolerant and very low on financial education, then yes, just pay it off. Pay off the 2.5%. You don't have to worry about it. Long term, you don't have a payment and less liability for you. Life is going to be better. But if your risk tolerance is a little bit higher and your knowledge of real estate investing or investing in general is above average, there's probably a chance that you do better jumping into, investing that money into something else. Wouldn't it be better, rather than pay 2.5%, gain 3, 4, 5%, investing your money outside? Wouldn't your money grow a lot faster? Guys, we also have to look at our real net cost of the money we're borrowing, because if it's 2.5%, but there's a tax write-off tied to it. In other words, part of that you're gonna get back as a credit when you file your taxes. Then the true number is not 2.5. The true number could be 1.5, and then make it even more interesting, whether can you do more than 1.5, put your money out there and invest it and make more than 1.5.